Hong Kong returning to budget surplus of $370 million after deficits for the last 3 years. The financial secretary still calling for fiscal prudence, mapping out long-term plans over short-term sweeteners in his budget speech. Deborah Wong with this report.
There is a lot of optimism this year round compared to the last 3 years where Hong Kong experienced deficit. In fact, Paul Chan started off his speech talking about how the economy is forecasted to grow up to 3.5% this year, and he also talked a little bit about the IPO boom that Hong Kong experienced last year, bringing in about 280 Hong Kong billion dollars.
經格局深刻變化，外圍環境複雜多變，但係本港金融市場表現亮麗。 金融體系保持穩健，我哋將會繼續積極鞏固現有嘅優勢，拓展新興領域，並強化市場體系同埋風險管控，深化大灣區嘅金融合作。
To grow the pot, the government will push stock trading reforms, paving the way for more tech companies to list in the city. It will also enhance its tax concession regime to draw more family offices and funds. Despite the strong fiscal performance, Mr. Chan says the city still needs to contain expenditure, cutting civil service numbers by 2%.
As long as the economic growth is decent and there are transactions in equities and real estate, then the operating account can be supported in the fiscal book. But the problem about that is, of course, such revenue can also be quite volatile because no one can guarantee that asset prices in Hong Kong, like equities and properties, can always shoot up to bring such revenue.
This year, Hong Kong will formulate a 5-year plan to correspond with China's 15th 5-year plan, which will be discussed in Beijing over the next 2 weeks. The city's budget will align with the national agenda, where early proposals focus on emerging sectors like tech, space, and the low-altitude economy. Mr. Chan announced a series of cross-border economic policies, such as exploring cross-boundary logistics and flight routes, as well as allocating $28 million to set up a national manufacturing innovation center outside the mainland. It's also earmarked over $1 billion to emerging sectors like health tech, AI, and robotics. Yet amid the integration, experts say it remains crucial for Hong Kong to retain its unique advantage, like focusing on professional services as well as the financial sector.
I think this is a challenge that eventually Hong Kong will need to face. On the one hand, it can become an entry point still for global investors to access the Chinese market and also in the tech collaboration, assuming that maybe there's certain operation they want to keep in Hong Kong but not in mainland. But at the same time, if the integration gets too closely, that can also be a cost.
As much as Hong Kong's economy is tied to the mainland, the city is playing to its strengths, an approach that lawmakers say will boost its competitiveness in the long run. Deborah Wong, CNA, Hong Kong.